and welcome to Next Gen Finance, an SEB podcast about sustainable finance. My name is Lina Apsheva, I am your host, and today I am joined in the studio by John Carlbäck, a product manager with a focus on savings, mutual funds, and sustainability at business and retail banking at SEB. Hi, John, and welcome to the podcast.
Thank you, Lina.
So there are actually two things that I would like to discuss with you, or rather ask you, John. My first question is about private investments and how private individuals can create sustainability impact through their investments and savings. And the second question is about the annual survey by SEB Asset Management on the priorities of investors in the different sustainability areas. I would love to discuss the results from the past year's survey and also the way that the bank's fund company uses these insights in its work. All right, John. Sustainability is a notoriously broad topic. So I'm wondering, how do you define sustainability within your work?
For me personally, I define it as being actually a translator of complex ESG data and legislation into insight for our retail investors. I'm trying to make it more easier to understand, which in the end could end up in, a new feature in your app or something. But when we talk about the sustainability products that I work with, equities and funds, and how they can be used, it really depends on each individual's investor's perspective on what sustainability are. Defining sustainability in private investment is much more complex, I would say, than, shopping at the grocery store where you can just pick an eco label. In the financial industry, it's not that straightforward. You have to ask yourselves, what matters most to you? Is it minimizing sustainability risk, or is it doing, thematic investing, or do you have ethical beliefs? They want to avoid certain industries. Or perhaps it could be a philanthropic approach where some of your money should go direct back to society or the planet. Or maybe you're looking for an investment that are Paris-aligned. Or maybe you are familiar with the EU SFDR definitions and standards. So, in the end, it really comes down to the investor's own values and perspective of what sustainability is.
And what options would you say, regardless of how one might interpret sustainability, are available to private individuals when they want to invest or save their money in a more sustainable way?
If I take the example that I just mentioned, I can elaborate that a little bit more and divide it into being direct investment and indirect investment, and then also take into account the sustainability risk. First, if we look to the more indirect investments for sustainability, we have the thematic investment. That's, I believe in that future or in that theme. It could be clean energy or water or health, etc., or environment. You have several funds that have this specific theme. The other perspective is to go, EU seem to have done a pretty good job here. They have defined Article 9 funds, the dark green funds, as sustainable, or they have, and the funds are a high share of sustainable investments and taxonomy aligned. Or they have the Article 8 funds where, the sort of the light green funds that have some elements of sustainability. The third indirect is investing from your ethical beliefs. That could be, what values guiding your investment. That's often about avoiding certain industry like fossil fuel, tobacco, gambling, or unwanted industries, and picking any funds almost in our fund list. They take into consideration the ethical beliefs. Of course, it has really to be back to the individuals, investors, on what ethical belief they have. However, the indirect investments do not, if it's not an IPO or a new issue of shares, move money into green projects. It's rather shifting of ownership at the secondary markets. However, really important though, the asset manager, they have the trust as an asset owner to engage and transform with the companies included in the funds to be more in line with the Paris Agreement or following human rights. The other perspective is if you, I want to do more effect and do more direct impact, then you have several options. The first one is green savings accounts, where the bank dedicate and lends money to green householding. That has very low risk. It's the same as a usual savings account. If you go up the risk ladder a little bit, you have the green bond funds, where the capital goes more directly to climate initiatives. If you go further up again on the risk ladder, then you have charitable funds. Those funds, part of the management fee, they go back to charity. And actually, as we record this podcast, we are building a new functionality in our fund list to make it easier to find charity funds. So customer can easily find those sort of funds. If you're climbing up the risk ladder, then you have impact funds. Impact funds are great if you can find them. What I mean with that is they're more directed to professional investors or investors that have their own advisors. There are, of course, non-bank products, and they have the highest risk. And that's more, philanthropic investments, and the return is not financial performance, but rather a healthy planet. That could be, phasing out fossil fuel. You put aside some certain money for that purpose. And in my own portfolio, in my own personal investments, I have 4 different products that help me get to net zero. But that's philanthropic investments, and doesn't give you financial return, but it give you invest in the planet more direct. So it's really about what you want to do as an investor. Last but not least, I think where we all came from in this industry, it's about risk, it's sustainability risk. And that perspective can also be a guiding star for some investments. I want to make sure that I avoid sustainability risk, if it's environmental, social, or governance. So have those 3 perspectives: indirect, direct, and sustainability risk.
If someone asks me what is sustainable finance, if I were to answer that question, I usually say, well, it's finance that creates benefits for whether the environment or society, but also creates return. And therefore, it is different from charity. So if you're just giving money to your favorite charity organization, then that's not sustainable finance. But you kind of have a different perspective on that. I really like how you said you still use the word investing. You're just saying investing in the planet. So
Yeah.
definitely another perspective on that. So that will make me rethink my definition. And then if we go a little bit into themes, because you mentioned some themes like health, water, clean energy, I'm wondering what kind of trends are you seeing among these type of investments when it comes to the different themes?
The indirect investment for sure is the big mega trend. That actually means the Article 8 and 9. And I was just looking into the numbers to see where we ended up. And actually, 97% of our asset under management for business and retail banking clients, they are managed in either Article 8 or Article 9 funds. So the majority of our funds are sort of sustainable.
And maybe we should define then Article 8 and Article 9 in case...
Yeah, that's that's great. Article 8, that's funds with sustainable elements or characteristics. But Article 9, that is funds that has sustainability as a specific goal and high level of sustainable investment and taxonomy aligned. So we see then that this has been very popular. And actually, to give an example, when we introduce a quick filter in a fund list for finding the sustainable funds, the traffic was more than doubled. So we saw an increase there. And we have seen the market, that there is a continuous flow into this fund, even though small.
And then are there any funds that focus on specific themes that are maybe more popular than others?
Yeah, I mean, I think clean energy has been popular. It has some rough years, but that has been in focus, and also some water investment. But actually, we see now more and more people looking into index for sustainability. Then it's more funds that are Paris aligned. They're broad and they have a low management fee. So that could also be an explanation.
Well, you mentioned the traffic to these different Article 8 and Article 9 funds. And I'm wondering actually, how interested are people in saving and investing sustainably? Do you have any data on this question?
I mentioned earlier that we have 97% in Article 8 and Article 9. But if we look only into funds that are into sustainable investments, Article 9, the trend since 2022 is still that we are increasing the share of Article 9 funds towards AUM. So it has been more and more of our asset under management being in Article 9. And we actually had a positive inflow even the year 2022, which was not a good year when it comes to flows and a turbulent market. And actually 2025 was a peak year when it comes to inflow of to Article 9 funds. So it's still small. It's about 3.2% of our total asset under management and 3.8% of our net flow. So it's still a small, but the trend is increasing, and I don't see that when I read outside the bank. So our customer believes in the trend and are doing some investment in this area.
I mean, this sounds great. John, I'm sure that some or most people listening to this conversation will agree, but then some will also ask, then what is the downside? It's got to be more expensive for the customer, or there's got to be some sort of a underwater rock. So what would you say are the downsides to investing in more sustainable funds?
Should always have critical view when someone trying to sell things. Thematic investments, by definition, if it's sustainable or if it's not sustainable, I mean, new technology, gold, all those funds comes with a high management fee. That's the general. If you want to have, but on the other hand, we do have funds with low management fee that also are sustainable. For instance, we have a lot of index funds that are Paris aligned. We have the green bond funds as well. So it's not necessarily true that the funds have to come with a management fee. But if they are actively management, yes, in relation to a passive index fund, they have a higher management fee, but not in comparison with another active management fund. I could give an example. We have last year, our top performance was the gold fund. It performed over 100%. It has above 2% in management fee. Who wouldn't have invested in that if they knew that gold would rush for 100%? Yes, it's actively managed, and that's also thought of a theme.
But then I'm wondering, let's say someone is listening to us right now who doesn't have any sort of, idea what kind of or how their current investments and savings align with sustainability, and they want to make sure that they align to a larger extent. What kind of advice would you give to someone who wants to start out investing in or saving in a more sustainable way?
Then I had to ask them a lot of questions, which I started this when you asked, one of the first questions you asked me, and ask about their preferences. So it's really difficult. Of course, if you are have booked an advisory meeting, we have to ask us some specific questions that are aligned with the MiFID, etc. But that's normally don't get the discussion going. Talking about taxonomy and SFDR alignment and PI, which is what we have to ask our customers. So I think it's rather asking those questions that I said in beginning, or the option that I listed in the beginning. Do you want to have a more direct or indirect or sustainability risk important for you? And if you're okay with only having an okay level of sustainability, then you have a big smorgasbord of funds. The majority of the funds are either Article 8 or 9 funds, and then you can go for other preference and looking into your risk appetite and the normal question that you ask in the advisory meeting.
And then let's say that someone has listened to the different options that are out there. They made up their mind and kind of saved some money in a green savings account and maybe invested some in some index funds with that are Article 8. And then they come back to you in 2 years' time and they say, John, I want to take my investments into the next level, make it even more sustainable. Then what advice would you give to that person then?
Actually, I didn't mention equities that much when we spoke earlier about the different option, but I think doing a more direct investment in equities, that comes with a high risk, of course, but we have actually in our equity list made it super easy for retail investors to look into sustainability data for companies. So you can see how big are their greenhouse gas emission, what are the carbon intensity, how well are they aligned with the Paris Agreement, how's it look with women in board, etc., etc. So there are a lot of data there, and then you can invest like a fund manager do. You can go, okay, that company that has high emissions, but they have good. They're doing a good progress. They're Paris aligned, so maybe they have a good product as well. So there's possibility to do investment in equities, but it takes more from the private investor than going into a broad index fund.
Great. I mean, I think there is a lot of food for thought there. And now, before we move on to the next topic, I'm wondering, now that we have wrapped up 2025 and we are starting a new year, what are your reflections on this past year and how did it go for sustainability and private investments?
It was a big ESG backlash last year. I think everyone can acknowledge that. So many investors, they actually missed the comeback of renewable energy on the stock market. We saw a performance around, for funds, about 20% for funds that are into renewable energy, and that's in Swedish currency. And then we have the US dollar, who went down, 20%. So in local currency, the funds were up, 40%. On the other hand, health didn't perform that well. Water didn't perform that well. So going back to the sustainable investment, I think it's really important that you don't put all your eggs in one basket. have a portfolio mindset, and also when it comes to sustainable investment, and pick different themes and index, etc., and build it from there.
Well, it's a good thing that sustainability is such a broad topic that there are many different areas within the area of sustainability, and you can invest and save in many different ways and it will still be sustainable. And then if we then move over to the asset management side, and you did mention fund companies and the way they invest, and also this aspect of active ownership, so the fund companies actually having a say in the companies that they invest in. We actually did have a podcast specifically about SEB Asset Management a few months ago, so I would definitely encourage the listeners to go back and listen to that one if they're interested in learning about asset management in a little bit more general sense. But today we will talk about the sustainability survey that SEB AM, so SEB's fund company, conducts every year. And why don't we just start by talking about what that survey is?
Actually, what it is, it's that we, for the 9th year in a row, we asked our customers, which own SEB funds, to pick the top 3 UN 17 Sustainable Development Goals that they think are the most important. So with that, we can the fund company can more easily prioritize efforts, what to engage in, and influence the sustainability work with the company that they invest in. It's so-called the active ownership.
Yeah, and just to clarify, in case some of our listeners might get lost in this kind of structure, so the SEB Asset Management creates funds, invests in companies, and then private individuals can buy basically bits of those funds or invest into those funds and then get return. And then the big question, I guess, is what were the results last year? What did the investors think were the most important areas of sustainability?
The climate change remains the issue that the fund unit holders value the highest. The second one, also which won the list last year, is clean water and sanitation. And the third one was actually new in the top 3, which is quality education for all.
Very interesting, especially with that third one. I mean, I'm also happy to hear about climate change being as important in the eyes of the respondents of the survey. And then clean water is also, of course, quite a specific topic, right? So also interesting to see as number 2. But the quality education, what do you think? How can we interpret these results? Any ideas?
Right now, people naturally focus on more immediate needs that they see, like, are those poor people don't have food? Are they safe? It's a war going on. So, of course, that comes closer to the heart than the climate crisis, which we every now get to see by extreme weather events. But it's not like every day for all of us. So that's why I think those sort of questions come closer to people's heart and mind. I don't think it really means that the climate change and biodiversity are not that important, but just the attention it's closer to other sustainable goals.
And if we look then at maybe the top 5 or the top 10 of how the respondents voted, are there any other differences compared to the previous years? Are there any patterns that you've seen in the results?
We saw, of course, I confirmed that the climate change was on top, but we've decreased in that from 41 to 37%, for instance. And the same goes for biodiversity and environment, that went from 23 to 19. On the other hand, we see the social goals has increased.
And then if we go back to our discussion on asset management, there is one more question that I wanted to ask there, and that is, how does SEB, both SEB the bank and SEB Asset Management, work with the results that we get from this survey?
So we see that our fund company, they are one of the biggest shareholders. in many companies. So they have a huge stake and can make influence on, for instance, voting on annual general meetings, where they can set requirements for companies to have climate goals, for instance. I talked about Paris alignment earlier. Second one could be that they participate in a nomination committee to ensure that the board have right expertise, etc. on the sustainability, or actually in direct dialogue. Sitting there, going to meetings and said, we like your company, but we see that you don't have any climate goals. For us, it's important to have that, etc.
I really appreciate all of the insights and the expertise that you've shared with us today. I wanted to ask if you have any advice for people, whether it's private investors or maybe people working in the bank or in other areas of business, on how they could incorporate more sustainability into their life and their work. And, I usually ask this question to all of our guests, but I'm especially curious to hear what you have to say, because I know that you incorporate sustainability a lot into your life.
It's a mindset. Me personally, I'm trying to live, reduce my own carbon emission and living by net zero and taking doing my own sort of investment in more direct projects that mitigates the climate change or phasing out fossil fuel, etc. So I think it's you have to look, how much can I do as an individual, how much can you do as a society, but one individual can't do everything, but you can at least, depending where you are in life, reduce your own emissions, of course, but also look on the other side. How can we reduce what we already emit? I think we have to take that step as well. I know we as a bank are looking into that, but you as an individual can also do it.
Great. Thank you so much, John.
Thank you, Lina.
And thanks as always to all of our listeners for tuning in today. Please don't forget to like the podcast or add it to your favorites, depending on which platform you're listening to us on. That way you will be notified whenever new episodes come out. So thank you for joining today. Take care and goodbye.